So you've made the most compelling case I've ever heard for the need for something like Bitcoin. So you're saying, just to make sure that everyone's following this, the whole point of Bitcoin is to escape the inflation vortex that has consumed all these previous empires.
The point of Bitcoin is to fix the money. And money is energy, and energy is life. And if I keep sucking the energy out of the economy, I'm sucking the oxygen out of your system. Either, under the best case, you perform poorly. Under the worst case, I suffocate you to death or freeze you to death. That's the problem. That's why empires collapse. That's why economies collapse. And the problem, it's not just a problem for an individual. It's not just a problem for a family. It's a problem for every institution. It's a problem for every company. It's a problem for every city, every municipality, every government, every civilization.
Welcome back, guys. Breaking news. The global economy is facing unprecedented challenges that could jeopardize the dollar's reserve currency status. But fear not, the ultimate protection against economic turmoil and institutional mistrust is Bitcoin. It's time to put on the oxygen mask. Is the dollar in trouble? Well, Blackrock CEO Larry Fink thinks so. Probably putting it lightly, with a $50 trillion debt looming and estimated by 2030. Even more a wild question, will America collapse? We got some full intensity Bitcoin macro. Let's get it. Here we go. Blackrock CEO Larry Fink says U.S. is jeopardizing the dollar's reserve currency status. Let's dive into this. The CEO of the world's largest asset manager, Blackrock, has warned that the United States is jeopardizing the U.S. dollar's reserve currency status. He noted that the debt ceiling debate, risk of national default, and the possible credit rating downgrade are destabilizing factors for the USD. Obviously, he also predicted that the Federal Reserve will hike interest rates at least 2 more times. Larry Fink on rate hikes and inflation. The executive expects the Fed to hike interest rates at least 2 more times, emphasizing the Fed is not finished, the inflation is still too strong and too sticky. Quote, the Fed is going to have to be more vigilant, Fink said, noting that while the economy is more resilient than the market realizes, there are pockets of problems, such as the commercial real estate sector. We talked about that the other day. Last month, Federal Reserve Chair Jerome Powell hinted that the Fed may pause raising interest rates this month. Quote, I just don't see evidence of a reduction in inflation, or I don't see evidence that we're going to have a hard landing, the BlackRock executive opined. However, he downplayed the risk of a U.S. recession, noting that if it were to occur, it would likely be modest. Now to the big stuff. Risks to the U.S. dollar reserve currency status. The BlackRock boss warned that the drama surrounding the debt ceiling has eroded trust in the U.S. dollar as the world's reserve currency. He cautioned, quote, I believe we'll have a resolution, but let's be clear, the United States is jeopardizing its reserve currency status. He explained that the debate around that debt ceiling, the risks of the U.S. defaulting on its debt obligations, and possible credit rating downgrades were all destabilizing. Quote, we are eroding some of that trust, which in the long run we need to rectify and rebuild, he further said. Nice piece at the end of the article here. Prior to Congress reaching the debt ceiling deal, Moody's said the greatest near-term danger to the dollar's position stems from the risk of confidence-sapping policy mistakes by the U.S. authorities themselves. That's what happens when you have a centralized fiat currency. On Saturday, President Joe Biden signed a bill that suspends the U.S. government's $31 trillion debt ceiling, averting a possible U.S. default. Treasury Secretary Janet Yellen previously warned that the Treasury would be unable to pay all of the government's bills on June 5th if Congress had not acted by then. Man, that is serious stuff. And then we've talked about de-dollarization and BRICS. Check out that if you haven't. And now let's get into this headline. We're not going to dive too deep into the article, but from The Atlantic, America is headed toward collapse. And when I get into some of this article, what I got from it is maybe they've read The Fourth Turning. They should probably check out some Brandon Quittem. We had him on with Nico, Simply Bitcoin IRL, but how all this collection of problems that seems to arise, and then we have weak men created hard times creating strong men, and where we are in the cycle, in the fourth turning. And again, this is all the calamity is further advertisement to use something like Bitcoin, that we don't have to trust these inept central planners, gatekeepers, and government officials. There's a better way. Interesting enough, though, Larry Fink himself has made some interesting comments relating to Bitcoin being an answer in these unsettling times.
Having a digital currency has real impact on the US dollar, because having a digital currency makes the need for the US dollar to be less relevant. The US, and I'm not talking about for Americans, I'm talking about for international holders of dollar-based assets. The question I would raise, and maybe another time Mark and I could talk about it, does it change the need for dollar reserve as a reserve currency if there was a true digital currency that was separated from dollar-based assets and other things like that? So many questions need to be answered before I could say, is it real and alive? But it certainly has created a lot of imagination, a lot of interest, and it certainly has the potential to evolving into something real.
Definitely interesting statement coming from Larry Fink, Blackrock CEO. And we've done a lot on Larry Fink. We'll have some of that in the notes and up above for you to check out for more information. But don't think we forgot about the U.S. debt. This article in Zero Hedge, the debt ceiling crisis is over, and now the U.S. debt will rise from $31 trillion to $50 trillion by 2030. No big deal. Hopefully we still own things and be happy. You will if you start stacking sats today. Now, this is the main piece of that article. It is unlikely that in the decades ahead, a head of state will send the White House a gift to commemorate the goodwill shown by America in rescuing our foreign creditors with the potentially catastrophic default they faced in 2023. No one will even remember it. What will hold their attention is the inexorable expansion of our extraordinary debt, which is set to rise from $31.4 trillion today to $50 trillion by 2030, and then really take off, assuming rather benign economic and market conditions, which we know rarely persist uninterrupted. And let's take a look at this chart. All right, so federal debt held by the public is projected to rise from 98% of GDP in 2023 to 118% in 2033, an average increase of 2 percentage points per year. Over that period, the growth of interest costs and mandatory spending outpaces the growth of revenues in the economy, driving up debt. Those factors persist beyond 2033, pushing the federal debt higher still to 195% of GDP by 2053. And this chart here is showing the federal debt held by the public 1900 to 2053, and this projection, look at it take off. It goes parabolic, and down here you may not see it, but debt is projected to rise in relation to GDP, mainly because of increasing interest costs and the growth of spending on major healthcare programs and Social Security. In a world where the dollar's reserve currency status is at stake and institutional trust is eroding, it's crucial to have a safeguard for your hard-earned wealth, your time, your energy. Fortunately, Bitcoin has emerged as that beacon of hope amidst all this uncertainty. As the CEO of BlackRock, Larry Fink, warns about the risk to the dollar's dominance, Bitcoin presents a decentralized alternative that transcends borders and government control. Moreover, with the fourth turning, the societal trends outlined in the Atlantic article also shedding light on the diminishing trust in institutions and the economy. In such an environment, Bitcoin's transparent, immutable, decentralized nature provides a resilient store of value. Its limited supply and cyber hornet security ensure protection against inflation and potential economic crises caused by, well, excessive debt, like 195% debt to GDP ratios, as highlighted in the Zero Hedge article. Being reliant on all these crony capitalists and sketchy politicians and big bankers and big corporate leaders that have no interest in looking out for you, Bitcoin offers financial sovereignty to individuals. It empowers them to be their own custodian of their wealth and their property. By embracing Bitcoin, you gain control over your property and your future, free from vulnerabilities of traditional systems. Bitcoin is a long-term way of safeguarding your wealth and securing a brighter future based on your proof of work. Bitcoin is not just digital currency. It's an insurance policy against the manipulation of money by central banks and by central planners. It raises essential questions. Why are we forced to use a currency, a money that steals from us? Why should we allow our life force to be sucked away when the solution is within our reach? It's time to embrace freedom and take control of our own destinies. Hey, stay tuned this week as we will dive into Coinbase and Binance getting absolutely wrecked. Also, we'll be updating on the Bitcoin revolution in El Salvador and shed light on Klaus Schwab's plot for a one-world government. We got a ton of information coming your way, so stay tuned. Remember, liking, subscribing, and sharing our Simply Bitcoin content is one way you can contribute to the peaceful revolution. And if you're not stacking, you're slacking. Until next time, peace and cheers to the bright orange future. See you guys.